Stocks oscillate in a range amid global and domestic uncertainties, even as the bread turns positive with advances well ahead of declines. Utilities and metals are the big gainers, even as defensives, IT, FMCG and healthcare drag. Novelis files with SEC for an IPO that will see its parent Hindalco sell some stake to list it on the New York Stock Exchange. The Hindalco stock perks up on the move. Zomato sees profit-taking after the sharp run-up in the stock over the past 15 sessions. This is despite a strong performance, with Blinkit turning EBITDA positive and analysts giving the numbers a thumbs up. Shriram Finance perks up on the sale of its housing finance arm to Warburg Pincus. Jindal Steel and Power gains on a better-than-expected margin show. Cochin Shipyard gets a European order boost, while Aarti Pharma rises after margin sleep. Hello and welcome to Halftime Report. I'm Ekta Batra. With me is Mangalam Malu. Well, it is turning out to be a steady day, at least for the mid-caps at this point in time. The Nifty and the Sensex are consolidating, so let's see whether it picks up pace. It's a lot about stock-specific action today. And interestingly, a lot of the stocks which did see a run-up yesterday are seeing profit booking today. So case in point would be Piramal Pharma, Cipla, all of those stocks in the red. But nonetheless, in terms of the upside, we have a lot of specific stocks to talk about. And just to name a few, we have the likes of Aarti Pharma, which is up around 13% odd, IREDA, which is up around 5.5% odd, and stocks such as IFCI, which is seeing traction on the upside within the broader markets, Mankind, which is up around 3.6%. So interesting moves coming into specific stocks. We do have the WPI data, which we are expecting sometime soon. And in fact, it's coming at around 1.26% versus our poll of around 1 odd percent. So it is higher than what the street was anticipating, and this is versus 0.5% on a month-on-month basis. Remember that interestingly, the CRB commodity index was quite muted in the previous month. It was up only around 0.4% on a month-on-month basis, although metal prices did rise over the month. We'll get to more details on that. The food inflation ticked up for CPI and was a bit of a concern there, and that has been a bit sticky for the WPI data as well. Fuel and power, as you can see, has gone from deflation in the previous month to an inflation this month of around 1.4%. So these are a couple of details. We'll get Aditi Nair soon enough. But Mangalam, any more details on the WPI?
Well, a couple of details that we have so far. Fuel and power, of course, has moved from deflation territory into inflation territory 1.4. I think the primary articles have also increased from around 4.5 to about 5.01. Importantly, we're seeing a move on food inflation as well, which is coming closer to 5%, which is slightly higher than what we saw in the previous month. But does the market get concerned about WPI right now? Seems like not, because we're seeing a section of stocks do well. And from yesterday's low, we've seen a recovery of, nearly 350 points on the Nifty. And the kind of stocks that are doing well belong to the Adani group. So we have Adani End, which is the top Nifty gainer with a gain of about 5%. Adani Ports about, 2.5% higher as well. And any other Adani group stocks that you see, any stock which is prefixed with the Adani, name has seen a bit of an up move. So is it something that the street is sussing with regards to, a bet on the outcome of the general election in the middle of all the four phases, or something is a parameter that we'll keep an eye out on in particular? And the mid-cap index now up almost 0.6%, more stocks advancing, telling you that the fear may be out of the way. I'll just watch out for the India VIX, whether it declines from here or not.
Yes, absolutely. It's been a stupendous rise for the India VIX. So let's see where that goes from here on. But nonetheless, we have Aditi Nair, who's the chief economist at ICRA, joining in for her take on the WPI data. Aditi, hi, welcome to the show. 13-month high for the WPI, which is coming at 1.3% for the month of April. Tell us more. What is your reading on it?
Hi, that certainly it's come in higher than what we've seen in a long time, but we were actually expecting the print to be even higher at around 1.7%. And a couple of factors, typically with the WPI, sometimes we find that commodity prices, which move very fast in tandem with what's happening globally, tend to get revised after a month in terms of their inclusion in the WPI. So that could be part of the reason, because now many commodity prices have moved higher than where they were, in the year ago month, and that's going to lead to many of the subsectors moving from a deflation into a YOY inflation, and that's a process we expect will continue over the course of the next few months. So slightly lower than expected, but yes, much higher than the prints we've been used to in the last year or so.
Right, Aditi, just hold on to that thought. Those are visuals coming in from the DM office where Prime Minister Narendra Modi is filing his nomination papers in Varanasi. Remember, earlier in the day, he did go to the Kal Bhairav temple, and what we know is the four proposers of Prime Minister Narendra Modi are also there. Pandit Ganeshwar Shastri, Baijnath Patel, Lalchand Kushwaha and Sanjay Sonkar, the four proposers of Prime Minister Modi for his Lok Sabha nomination. There was a roadshow earlier. Thereafter, he went to the temple, and now you see him filing his papers for nomination in the Lok Sabha elections at the DM office in Varanasi.
Okay, well, those are the visuals coming in, and we'll keep getting you those visuals as the Prime Minister does file his nomination papers. But Aditi, just wanted your thoughts in terms of the food inflation, because that was a bit of a concern in the CPI data, and that's inched up in WPI as well. How are you reading the trajectory of food inflation now?
See, food inflation is going to be quite interesting this year. It's not going to give us a very clear or a linear kind of trajectory in the next few months. So right now, what we've got is the heat wave and the fact that reservoir levels are quite low. We're coming off, a bad monsoon last year. So some of these factors are still at play. And in any case, in the summer months, vegetable and other perishable prices start rising up very rapidly. So we're in the process of that, exacerbated by the heat wave in parts of the country. Now, we've also got strange base effects, which are there in one direction for some months, another direction for other months. And that is also going to have an impact on the monthly numbers over the next 1 to 2 quarters. Other than that, we are hoping that the monsoon will indeed, be well distributed and a normal magnitude. And that is something which will then have an impact on the food inflation readings from, let's say, August, September onwards, once all of these other immediate factors are out of the way.
Well, out of curiosity, Aditi, in your model for what the RBI is likely to do, how much weightage do you ascribe to the Indian inflation, and how much right now to what's happening in the US? Because a lot of our action is also determined by what the US Fed does, and seems like maybe for now, rate cuts are at least for the next couple of meetings off the table for the US Fed.
See, even if we ignore what happens with the US Fed, rate cuts are off the table in the Indian context as well for the next couple of meetings. Because June, really, we have no reason to believe that the MPC will vote for a rate cut. A majority of the MPC will vote for a rate cut as soon as next month. And even by the August policy, we will only have additional clarity on how the monsoon has, how the onset has been and how it's progressed in the first half of the monsoon season. So a fair amount of uncertainty, at least on this account, will be out of the way. Although, of course, the second half of the monsoon season also ends up being really important because while the crops are growing, so it's not just the sowing which is concentrated in July and the first half of August, but even during the gestation period, very low or very high rainfall can have an impact on the crop yields. But yes, at least we'll know for the first half of the monsoon season how things have turned out by the time the MPC meets in August. So at best, we were expecting that there could be a stance change at that time. By the June meeting, we'll also know how the GDP data was for Q4. By the middle of August, we'll have some more indication of how growth is turning out for the second quarter. So if everything goes well, in any case, the best case scenario would be a stance change in August and a rate cut in October. But if there is an indication that the Fed may stay on hold for longer than that, then perhaps things could get delayed by a policy each. So a stance change, not in August, but in October, and a rate cut, not in October, but in December.
Okay. Well, Aditi, I just wanted to point out that we're still waiting for the core WPI to come through, and that's probably expected to still remain in contraction or deflation. But Aditi, what did the core CPI tell you when it comes to demand? Because that came in at the lowest level that we've seen in the entire series, at around 3.2% or odd. What does that tell you about demand, and what would that probably tell you in terms of a takeaway for the WPI as well?
So typically, the way that we're looking at all of the different sources of data about demand, I think the first thing is that demand is extremely uneven. It's probably a little bit stronger in urban areas than in rural areas, although the recent commentary we've gotten from the FMCG companies for the rural areas has turned a bit more encouraging. So that's a good sign. For the rural areas, for demand to come back more strongly, I think we'll have to wait until the monsoon is out of the way. And if it's favorable and well distributed on all the other things that I was just talking about, and we have a good crop season ahead of us, then we are hopeful that rural demand will become more strong by the end of Q2 going into Q3. So basically in time for the festive season. On the urban side, the sense we have is that our demand is, again, within urban, extremely uneven. We have pockets of high demand coming in from the higher income households where there's a wealth effect which is at play as well. And also from the new entrants into the workforce, we do find the demand is quite healthy. But it seems to be the middle part of the urban household segment where inflation and things like rentals seem to be much more of a concern. And it's not just inflation measured or thought of in terms of what prices were last year versus this year, which is a typical kind of YOY growth we look at. But even for bigger ticket items, which you replace once in 6 or 8 years, like a automobile, for example, the catch up of prices over a much longer period of time only really kind of affects you in your decisions when you go back to replace the item that you already have. So this would be true for other consumer durables as well. So it's not just the factor of a 1-year inflation that is at play, but the catch up since the last time that you replaced a big ticket item that can also have an impact on inflationary expectations and on decisions for what to do with disposable income.
Okay, all right. So Aditi, quickly, June 5th to 7th is the next RBI meeting. You're expecting rates to be unchanged, but in terms of the stance as well as the commentary, what would your opinion be?
No change in rates, no change in stance, and commentary to still be cautious, maybe slightly little more hopeful if the onset of the monsoon has been positive and if the GDP data has been in line with expectations. And I think these are the two factors that will really kind of determine the tone of the next policy meeting.
Right, Aditi. Thank you so much for joining in and giving us your view on the WPI, but more so on the macroeconomic data of the country right now and what the RBI would do over the next couple of meetings. Always a pleasure speaking with you. With that, we'll take a break with a note that the markets continue to do well. 22,200 is here for the Nifty. Take a break, come back, focus on a lot of these stocks which are buzzing around. The Nifty is now moved to the high point of trade.
Welcome back. Well, steady for the markets, at least for the mid-cap index, which is doing well today. So up around 0.6%. The advance decline ratio in fine fettle, so almost 3:1 in terms of the advances to the declines. But let's talk about specific stocks. It is a lot about earnings, and one such stock which has really caught the attention since last afternoon is Zomato. It's under pressure today, despite reporting a strong set of fourth quarter numbers. Manglam, tell us, what do the brokerages say? They did hold a conference call last evening as well. So there's a lot of information now to deal with.
Yep, there is a lot of information to deal with on Zomato. The interesting part is that the focus of aggressive expansion on Blinkit is something that the management is pretty clear about. So, what they spoke about in the call about Blinkit was looking to double their expansion out there. From 526 stores, they're going all the way up to 1,000 quick commerce stores, of which 100 will be added in this quarter itself. While Blinkit has turned adjusted EBITDA positive, the important part is that for the very near future, they might see Blinkit adjusted EBITDA to be near zero on account of this aggressive expansion that they've done. It's a steady state outlook that they've given, which could be about 4 to 5% in terms of a GOV margin that we would see there. And increased penetration in Mumbai, Bengaluru and Hyderabad alone can grow the GOV in Blinkit by about 4 times. GOV is the cross-order value that people make. On the back of that, brokerages have tweaked some of their estimates and increased their prices as well. So Nomura says that quick commerce can grow anywhere between 65 to 99% over the next couple of years, with a contribution margin of around 4.5%. Their target price is 225. Citi, we have Bernstein, we have CLSA. All of them have either buy or outperform ratings on the stock, with a target price which has been raised. For instance, by Citi is 235, Bernstein is 230, and CLSA close to 248. Jefferies too, while has raised the target price, says that the easy money in the stock, which is near 200% jump that we've seen in the last 12 months, is largely made, and the return expectations should be a little more modest in the next few months, and that's exactly what the stock has been doing since reporting its numbers yesterday. The other two imponderables that one will be watching out for would be one, whether the company goes ahead and has to spend a little more on operations when it comes to expanding, and secondly, the ESOP charge that the company has made. In fact, they've announced a new ESOP plan which dilutes their equity by about 2%. So those are a couple of imponderables that the street may be a little uncomfortable with. But look at that. In the last 6 months, the stock is up 55%. The last 1 year, over 200%. So maybe a bit of profit give back is what's taking place after what was a decent set of numbers.
Okay, all right. So that's on Zomato. Thanks very much for that. Well, the other stock which was making news from last evening was Shriram Finance, which is in focus today. Abhishek joins in with the details on the news and the takeaways from our conversation with the management and more on the big transaction that took place last evening.
Well, Shriram Finance is looking to sell stake in Shriram Housing Finance. The transaction is worth rupees 4,630 crores. Now, they will sell this to Mango Crest Investment, which is an affiliate of Warburg Pincus, and they will purchase stake from Valiant Partners as well. So, Shriram Finance holds about 83.8% in Shriram Housing Finance, while Valiant holds about 14.8% stake in the company. The financials for Shriram Housing Finance as of FY24, the AUM is about 13,760 crores. Gross NPA ratio is around 1%, with net NPA ratio at 0.8%. They are very strongly capitalized at about 24.97% capital adequacy ratio. We have brokerages who have written on this. So IIFL Securities has written on Shriram Finance. They have a buy recommendation, a target price of 2,850 per share. They say that less than 0.5% valuation benefit from the stake sale in the HFC subsidiary to Shriram Finance is taking place. The deal value Shriram Housing Finance at 2.1 times FY25 price to book value, which is lower than peers. The transaction will accrue profits of about rupees 2,350 crores, which will result in 110 basis point accretion to the tier 1 capital of Shriram Finance. So transaction should enable Shriram Finance to relocate its capital to high ROA business like vehicle financing as well as consumer financing. Back to you.
Okay, all right, Abhishek. Thanks very much for that. In fact, let's listen to Umesh Revankar, who's the Executive Vice Chairman of the company, talking to us earlier today.
The capital adequacy of SFL will improve by nearing to 100 basis point. That is one thing. And that will help us to grow our business faster for the next year or so. And also know we can focus on our business, which is the core. Our core business is lending to businesses, lending for buying of commercial vehicle and SME businesses, and we will focus on that. This year we have given target. We have guided the market with 15% AUM growth on the top line, but our focus will be to improve the bottom line this year. We are trying to get more digital play, and we're also trying to improve our operational efficiency, and you can definitely expect better bottom line growth than the top line growth. So that's what we are targeting this year.
All right, maybe a couple of reasons why the street may have sold into that up move that we saw in Shriram Finance this morning. The first part was that the valuations at which the stake was sold was a little lower than the previous rumored number, And the second part is that net of taxes, the amount that goes into the company's books is close to around just 1,360 crores. So not a big mover in terms of their capital going forward too. We've already seen a bit of an up move on the stock ahead of that. In the last 6 months, it's up 19%. Let's talk about the MSCI index review, which will be announcing the results of the May index review today. Vivek joins in to tell us what are the candidates that may make the cut this time around. Vivek.
Well, that's right. A lot of interest, and remember, a lot of these names have already been discussed. A lot of them have already been factored in as far as the street is concerned, given the fact that the cutoff was quite some time ago. But it's important to revisit these names, given the fact that tomorrow, prior to our own market opening, the MSCI will go ahead and announce the list of names that have made the cut and also the list of names that have been deleted. So quite a few names on the radar this time around. In fact, India could see its weightage go ahead even higher as far as the MSCI index itself is concerned. We are talking about the global standard index. So the stocks that could make the cut this time around are Shriram Finance, Thermax, Jindal Stainless, Phoenix Mills, Mankind Pharma, Bosch, PB Fintech, Solar Industries, Torrent Power, JSW Energy, Canara Bank, NHPC, Industar. All of these names are high probability inclusion candidates into the MSCI Global Standard Index. Two other names are there as well, Zydus Life Sciences as well as Dixon Technologies. These are low probability names, but they too, in case the MSCI has gone and pushed forward the cutoff date for the review, they could also make the entry into the MSCI list. On the other hand, which are the stocks that could be likely deletions from the list? Berger Paints, IGL and Paytm or 197 Communication. These are the stocks that could be removed from the MSCI Global Standard Index. Now, the other important stock that the street will have its eye on is HDFC Bank. Remember, expectations here have tempered significantly after the latest shareholding pattern was released, where it emerged that it appeared as though HDFC Bank missed the weightage increase in the MSCI index by a foreign headroom unavailability of close to 5 basis points. So on the back of that, HDFC Bank most likely has missed the bus, but in case MSCI decides to make an exception, there could be a significant weight up in HDFC Bank. But at this point of time, that's not being factored in. But there will be, some amount of expectation or hope that there is some clarity from MSCI as far as the treatment of HDFC Bank is concerned.
Okay, all right. Thanks very much for that, Vivek. Well, some numbers on your screen. Devyani International net loss versus a profit on a year-on-year basis. So there's been a bit of a pressure on the bottom line. We'll wait by for more details on whether there's any kind of exceptional which has come through. But nonetheless, a loss versus a profit year-on-year. We'll take a short break, but Sachitanan Uttikar of Trade Bulls will join in with his trading call. Stay tuned.
Welcome back. Just a word on Devyani International. The company reported a good revenue growth. The reason why there is a net loss versus a profit is because of an exceptional item of around 42 crores. So there's a net loss or exceptional loss of 42 crores, largely on account of the devaluation in the Nigerian currency, which the company has recognized as a translation loss. But there has been a big jump in the revenue, and that is something that the street would like. The other reason why the profitability has been impacted is because of the expansion that the company has done on their storefront, and as a result of which the depreciation expense has increased all the way up from 78 crore to 125 crore. So that's a non-cash expense. So for non-cash reasons, we've seen a decline in the bottom line, an exceptional translation loss in the Nigerian currency, and a big jump in depreciation. The other reason why the company's EBITDA may have been impacted is because of another jump that the company has seen in employee expenses from 94.5 crores. It's gone all the way up to 154 crores. That too is because of the company having announced an ESOP plan. So those are a couple of factors that are impacting the operational performance of Devyani International this time around. But one may expect the stock to recover from current levels because the top line growth has been extremely strong at around 38%. Though we will await the presentation to get in some more details with regards to the same store sales growth of all the brands that they run with regards to Pizza Hut or KFC. My sense is that KFC would have done a lot better with some improvement seen on Pizza Hut itself. But let's talk about the markets. The Nifty Bank as well as the mid-cap index have staged a pretty smart recovery after what we've seen as a drubbing in the last week and also, in the earlier part of yesterday. So a big recovery is what we've seen in a lot of these indices, Nifty and the mid-cap index in particular. Also, the Adani Group stocks. We've been talking about the way a lot of these Adani Group stocks have been moving. Adani and now top Nifty gainer with a gain of 5%. We've seen Adani Ports move 2% higher as well. And a lot of these Adani Group stocks, which are beyond the Nifty and the mid-cap index, doing extremely well too. India VIX is something we'll keep an ie out on. While it has been rising, now it's moved into the red after 12 sessions or 13 sessions of consistent jump from 10 to about 20.5. If the belief is that the fear is out of the market, then maybe we'd see an impact of that on India VIX immediately. The Nifty 22,100 put and the 22,200 calls are both extremely active. The 22,100 put has a premium of 74 rupees. 22,200 call has a premium of another 100 rupees. So that's telling you that the range that the street is working with is 22,000 at the lower level and on the way up 22,300 as well. And that ties in perfectly with the way the technicals are positioned for the market. The 100-day moving average at the 22,000 mark, a support, and on the way up 22,300 to 22,350 have both the 50 and the 20-day moving averages. Second half of this trade will also bring to you the Fin Nifty weekly options expiry, and in that we have the 21,300 call and the 21,200 put extremely active. The index is right in the middle of that range, and a lot of stocks that I'm watching out for. UPL, a lot of fresh short positions being added after a big up move that we saw yesterday. And PNB and Canara Bank are the two PSUs that I'm looking at, which may exit FNO ban after being in the FNO ban for a bit.
Okay, all right. So that's on the FNO space. We have Sachidanand Uttekar of Trade Bulls joining in now to discuss the markets with us. Sachidanand, hi, welcome to the show. Well, it's a steady day for us. Are you taking any long positions and what would your stock specific calls be?
Good afternoon, Ekta. Good afternoon, Mangalam. Clearly, if you look at the Nifty, the up move has been very steady since yesterday. After almost trending below its 5-day exponential moving average for 8 consecutive sessions, the Nifty is managing to hold that level of around 22,160. So if you look at the data, as Mangalam pointed out, we may see an extended move towards 22,300 when it comes to Nifty. And the base at around 22,000 looks very firm. From a trading perspective as well, until unless 22,110 is not breached, probably we may see this particular extension getting, extension move today itself. So we are optimistic on the market, and that's why we are recommending both long positions. The first stock that has hit our radar is HAL. Now, if you look at the overall structure, the stock has already been started trending above its life high levels. Despite of the fact that there is a fresh breakout on its daily and weekly structure, it's a rounding bottom formation which is exhibiting a price target up to around 4,300. So we are expecting that this particular momentum may continue towards 4,180 immediately, followed by 4,300 as a pattern target. That's why we are recommending building long positions here, keeping a stop loss at around 4,045. And the second counter which has hit our radar is a reversal. Basically, the stock name is Birla Soft. On the daily scale, we are seeing a homing pigeon formation. The RSI has turned from its oversold territory, and that's why we are expecting that there could be a quick recovery towards its 200-day exponential moving average, which is placed somewhere close to around 636. And that's why we are recommending building long positions here in Birla Soft. We could see a very good short covering move unfolding here. Keep a stop loss at around 595 for a pattern target of around 630.
Right, Sachi, would you have a word on Vodafone Idea? The stock's now surged. It's moved to the high point of trade. It's seen moves on either side, but lately they've been only on the upside. Now closing in on that 14 rupee mark for Vodafone Idea. In fact, it's up 4.5%. It's recovered a fair bit from the lows. Would you have any chart check on this one?
Mangalam, I think this particular level at around 12.5 has been very crucial. This is where its 200-day exponential moving average is placed. Even if you look at the monthly structure, the 20-month exponential moving average support is placed somewhere close to that level itself. So I think since last few weeks, it has been managing to create a fresh base near this level. So immediately, I think there could be a rebound back to around 14.5 levels. So it's a good time to accumulate this particular counter again. Once the stock starts trending above 1440, 1450, probably we may see a very good resumption towards that 18 level, which was its 52-week high. So I think it's a good time wherein the stock can be accumulated. Keep a trading stop loss somewhere close to around 12 on a weekly closing basis.
Okay, all right, Sachitanand, we're going to let you go on that note. Thanks very much for joining in and giving us those technical calls. We need to take a short break, but up next, Nisha Podar, our colleague, will connect with Ramesh Nair, CEO of Mindspace Business Parks REIT, to discuss all about the real estate investment trust. Stay tuned.
Hello and welcome to REIT Connect, where we decode real estate investment trusts as an investment destination in your diversified portfolio. Let me welcome on the show today Ramesh Nair, who's the CEO at Mindspace Business Parks REIT. Ramesh, always a pleasure to speak to you. Now, my first question, since its inception, how has the traction been for the investors when it comes to REIT investments?
From an Indian point of view, Nisha, right now around 200,000 people have invested in REITs, but it's only a 5-year product in India.
Yes.
If you look at a market like US, where REITs have been around since 1960s,
Yes.
what we know is close to half the households in the US have actually invested in REITs. Today, look at mutual funds. Close to 40 million Indians have invested in mutual funds. So I feel there's a huge opportunity for this 200,000 number to increase.
Right. When we talk about penetration, more acceptability of REITs as a product, and Ramesh, we know that property investment is at the heart of Indian investors and anything which is tax efficient as well. So what do you think are the advantages which will attract more investor participation? And the more sophisticated private equity, sovereign wealth funds, they're already invested in this product. As far as HNIs and retail investors are concerned, what are the advantages for them?
Nisha, 4-5 big advantages. First is volatility.
Yes.
When it doesn't truly reflect the broader market sentiments.
Yes.
So when the market goes up and down like this, you typically see the REIT stocks that goes up and down like this. So volatility is definitely one. Second is the diversification benefits you get. One needs to stay invested in a product like REIT, which is where you get both the benefits of equity and a debt, a hybrid kind of a model. Third is the transparency which today the REITs offer, which is phenomenal given all the sponsors we have in India managing those 4 REITs which we have. Next is the tax benefits which investors get. So the dividends you get is tax-free at the unit holders' hands. That's a big benefit again. And lastly, liquidity. You can sell it any moment you want, unlike hard assets, real estate, which you cannot sell. So these are some of the big advantages REITs have to offer, Nisha.
Yes, and also if somebody cannot afford a property with a big ticket investment, it's a very small ticket investment with which you can have an office space investment as well. That could also really be something that the investors could be really interested in.
You could buy 1 unit.
Yes, yes. And what about the risk parameters? Because there are a lot of investors who are risk averse. What do they need to know about REITs?
So I would classify the overall risk into 3 buckets. You have the leverage risk, you have the market risk, and you have the growth risk. From a growth risk point of view, our REIT market is obviously dependent on the overall demand supply of commercial real estate. How, what are the competition doing? How much of new supply is coming? Government regulations? How are GCCs doing? How are the IT services companies doing? So all that is the market and growth related, again connected to global economy, Indian economy. It has that bit of correlation to those. On the leverage part, tomorrow when the refinancing comes in an environment where interest rates are going up, if one doesn't have their interest rates under control, that could have a negative risk again on your REIT prices.
Right. So these are some of those macro as well as micro factors. But, you know, Ramesh, there are several questions that investors want to understand about this fairly newer product. right? So let me address one of those questions. Like you have cash generated being distributed to the investors, so that cash component is involved. But what about the operations as well as the growth avenues for a REIT like yourself? Where do you get the money and the cash to generate more growth potential for the future?
So as per SEBI guidelines, a REIT is mandated to distribute 90% of its net distributable cash flows to the unit holders.
Yes.
Which means we need to depend on the capital markets for our operating a REIT or growing the REIT. So on the capital market side, both debt and equity is something we need to rely on. The debt side, whether it's a commercial paper, whether it's NCDs, whether it's term loans, and on the equity side, doing preferential allotments, institutional placements, or rights issues. So these are the different ways we approach capital markets for operating and growing REITs.
All right. So being present in the capital markets gives you many avenues for raising future funds for the growth potential of the company. My final question to you would be that if you really look at this, property investment, now there are stocks available and they're listed companies from the real estate space. Compare that to REIT. How would you differentiate between the two, and what is the advantage that REIT offers?
So 3-4 things again, Nisha, there. One is we are structured as a business trust,
yes,
unlike a listed real estate company. Second, one needs to make sure our LTVs don't cross the 49% mark. We also need to, like I said earlier on, distribute 90% of the NDCF back to investors. So these are some of the big things. Again, 80% of the assets should either be completed or income generating. So it again protects broader investor interests.
All right. So many things to look at when it comes to advantages of REIT investment. Thank you so much, Ramesh Nair, for explaining that to us and to our viewers about the potential of REIT investments in the country. Thank you. With that, we'll slip into a short breather on the show.
Welcome back. Well, we do have the Zydus numbers on your screen where the EBITDA is up around 12% on a year-on-year basis. We have the revenue, which is up around 9% year-on-year. So that's what is trickling in as of now, with margins of around 21% versus 20.3%. So that's the update coming in. We'll get you more details on that. That is basically the consumer arm of Zydus in terms of the pharmaceutical company. So we'll get you more details. But overall, it seems as though it's a steady quarter with a growth of around 10%. But we do have Colgate, which will be releasing numbers. So a lot of trends from the FMCG space. Manglam, tell us more.
And more so for Colgate, because, it's a couple of factors which are playing out for Colgate. One, it'll recover, it'll see recovery the way rural recovery is playing out, and that's what we've heard from a lot of the other consumer companies as well. Secondly, it's got the strategic push that has come in from the new leadership, Prabha Narasimhan, who's been, working towards growing the category, at the same time spending a little more on advertisements and some new launches that the company's been doing. And thirdly, most importantly, Dabur had told us that, the oral care category grew at a certain rate, in which the naturals have seen a bit of a pickup. So would the same be for Colgate as well? Their Ved Shakti brand, is it going to do better or not, is something that we'll work with. 10% revenue growth is what the street is expecting, just shy of that 1,500 crore mark on the top line. The other thing you're looking at is 14% jump in the EBITDA, and this despite an increase in ad spends because of the couple of the leverage programs, the cost-cutting programs that the company's been doing. And secondly, we've seen premiumization play out as well. Margins would be around 34.7%, among the highest in the consumer space, with a net profit growth of 15.5%. 365 crores is what the street is working with. What would the revenue growth comprise of? 3 to 4% toothpaste volume growth, led by 4% price hikes. Rural, which contributes about 40% of the core's revenue recovery, will be important to track out there. And the outlook on natural segment and some of these new launches that the company's been doing will be crucial to watch as well. And apart from toothpaste and toothbrushes, one will also keep an eye out on the Palmolive business, because they've looked at Palmolive to grow at twice the pace of the overall company, and this time around they've relaunched some of their new body washes, etc. as well. So that would be another important ripple to watch out for Colgate. The stock's done well, currently holding up in the green with about 0.5% gains. Most likely the numbers are going to be post-markets. But on that note, we'll take a short break. On the other side, Manisha Gupta joins in with Dave Gill, who's the agricultural options broker at Marex Spectrum, joining in. Welcome back. You're watching us here on Halftime Report. The market's doing extremely well. Just keep an eye on Shree Cement. The stock was in the green for most part of today's trading session, but is now 2% off the highs as it gears up for its fourth quarter numbers today. Numbers likely typically comes during the afternoon itself, so maybe in the next hour or so. But in the meanwhile, the market's not doing particularly bad. The frontline indices, all of them come up for you. The Nifty is still holding just below that 22,200 mark. Mid-caps doing a tad better. So we'll just keep an eye out on this. That's about the equity markets. Let's go across to Manisha now, who joins in for all things commodities. Manisha.
Well, thank you so much for that, Manglam. And I'm looking at sugar right now because we've seen very, very volatile moves in the international markets. For the Indian markets as well, it all has been about policies. Will they get better after July are some of the questions that the sector seems to be asking. But let's get in Dave Gill. He's agricultural options broker at Marex, and he joins us on the show now. Dave, hi, thank you so much for joining us. And first of all, to the global prices, the raw sugar has been volatile. We've almost done 25 and 26 and trading below 19 right now. How have you seen this move in the last 3 or 4 months?
Yeah, absolutely. Thank you for having me. It's been exceptionally volatile in the global markets and confounded, to be honest, most of the expectation on price. We've seen speculators rather sort of flip from being net long, being net short, and being happy to add to their shorts. And this is really what is sort of driving the market lower day by day, and it keeps going. As you said, yesterday we printed sub 19 cents. So yeah, the pressure's on sugar right now.
It is. How are you also, Dave, looking at Brazil with the kind of numbers that they're throwing in? I mean, we do realize that, yes, the crude oil prices are way off the kind of highs that people talked about, or even the numbers that we saw in the beginning of this year. So there is no more sugar production from Brazil than ethanol. So with the kind of sugar production that Brazil really seems to be putting on, which perhaps is the second on record, what's your sense on the numbers going forward?
Sure. I think one thing that's unfortunate about sugar right now is the correlation with oil has been sort of disbanded for now. So oil prices obviously, okay, slightly off the highs, but notwithstanding, the sugar price and the oil price have sort of moved in opposing fashion. So we haven't really had any solace in oil prices. And as you say, the Brazilian crop is going to supply, or is expected to supply, around 80% of the export market. Brazil is due to be large. We had one of the largest meetings and focus points in New York last week. And the consensus really was that whilst Brazil is continuing to sort of feed the sugar requirements, and there is very robust demand, especially in the Far East, that prices can comfortably stay around here, unfortunately. So, yeah, I mean, in terms of numbers, we're looking at 600 million tons of cane, 41.6 million tons of sugar. But, you know, there have been some much bigger estimates in the room last week at our convention.
Oh, well, yes, Dave, I read some of them. But what's your sense on prices going forward from here? I mean, do you see 18 holding?
Yeah, I think what we're seeing really now is not necessarily a reflection of fundamentals, but we are seeing speculators, as we mentioned, flip from long to short. They're making money consistently, and what we really need is some sort of confirmation that the dry weather in Brazil today and in the past is going to impact Brazilian data, especially in terms of the crop data for yield. So the expectation is from our side that the first half of the year will continue to show fairly promising results in terms of data from Unica, which is the sort of bi-weekly Brazilian data point in the sugar market. And coming from June, July, we'll start to see those numbers fall off as the dry weather impacts. And then we could expect some sort of firmer prices and some potential short covering in the speculator market that would potentially push prices higher.
Dev, can I still push you for a number there?
Sure. I mean, in terms of what we think about the market today, we can understand why the market price is around here. Can it go lower? Some, again, in the room, the symposium, we're talking about a price of at a limit 18, and then going and sort of finding some headroom. I think one thing that's important to note is that the consumer demand all the way down has been exceptional. Import parities are open. Record prices domestically in Indonesia right now. China's been buying multiple cargoes, over 1 million tons. So the demand is there. But again, speculators are ruling the roost right now and driving prices lower in the short term. So we'll look forward to Unica, and we'll also look forward to tracking that weather as we do for our clients.
Sitting where you are right now, Dev, how are you looking at the India production, the ethanol policy and the overall policy, and the expectation that whatever we see now, perhaps in sense of exports, is one thing that is now perhaps postponed to 2025. But until then, how do you see India as a market?
Yeah, India is exceptionally important. Obviously, in terms of the dispersion of expectation, it's also important because it impacts the world markets. Views on what we can expect in terms of exports. We've been consistent that we don't expect exports to be for this crop year. Next crop year, still we think it's tight. Our numbers in terms of consumption much higher than the government and various associations and carry in and carry out stock. We don't, as a base case, expect large exports next year. And just to be clear, the exports we're talking about are excluding the kind of small piecemeal export quantities to places like the Maldives and neighboring countries and friends of India. We're talking about the kind of allowance for exports on a wide basis. So India next year, we're expecting around 30 million tons of sugar produced. And again, by our metric, we think it will be very tight. So the government's not going to be in any rush to export. Our view is that the government's three kind of priorities first are food for the domestic requirements, then ethanol, and then export. So if you satisfy the first two, then you might have a scenario next year where you could export, but that's a long way away. And with what's going on domestically in growth and the great news in India, consumption we expect to remain robust, and so that will be something for much closer to the time next year.
All right, Dev, thank you for that conversation. Appreciate your time. So, well, that's happening in the sugar markets internationally, where we perhaps are near the bottom right now, or 18 perhaps is a level that a lot of people would be comfortable at. But for the Indian markets, for sugar, it's going to be food and then ethanol and then perhaps exports, and that also in the second half of 2025. Until then, there perhaps is not going to be a policy change. But with that, it's a wrap on Halftime Report. Business Lunch will take all the action ahead.